here today with Damien Page from Loan Market. He's going to share some advice and tips on obtaining finance in the current market. Welcome, Damien.
Thank you, Matt.
So what are some of the top tips you can share with us today if we're thinking about obtaining finance?
So probably the biggest thing would be is have a game plan. So 3 to 6 months leading up to when you're actually looking at purchasing a property, start getting your spending habits in order, reducing your debts, paying your bills on time. Probably the second biggest thing that consumers are facing at the moment is credit card debt. So obviously if you can pay them off and reduce your limits as much as possible, it's a fantastic thing. If you've got a credit card and if you don't actually use it, just close that credit card.
Great.
Yeah, so banks can see the last 2 years of financial history, so it is a good idea to maintain good spending habits, pay your debts on time. If you've got a credit card and if you pay it by the due date out in full every month, you're not getting charged interest. So if you do have points associated to that card, you're gaining the points without actually paying the bank anything except for maybe an annual fee. So paying your credit cards out on time, it's probably the biggest thing at the moment that consumers are facing. Banks are now assessing credit cards very, very tightly. So it's a good idea if you do have them, if you do need them, use them and pay them out. If you don't need them, just don't have them.
Or reduce that debt right down, the spending limit on it.
Oh, absolutely, reduce the credit limit down as low as you possibly can.
Great. So as a homeowner, how often should I get a financial health check?
Financial health checks, you should be doing them annually. If you've got an existing broker, they have to do it annually. If you have gone to a lender yourself, every year you should be looking at what your interest rate is. You should actually be calling your current bank and saying, hey, what can you do with my interest rate? If they're not willing to move on it, now is the time to actually look around and see what else is out there.
Okay, great. So as a buyer at the moment, even if we're putting offers in, we think we've got pre-approval, we've got our letter of pre-approval, we need to take into account that it could actually take some time before we could have a loan go unconditional.
Oh, absolutely. Some banks are now offering pre-approvals without physically checking pay slips and so forth like that, actually checking your financials. So then if you are to go to formal approval, it could take the bank 10, 15 days to actually check through your things and provide you with formal approval, as well as valuations can take a while sometimes.
Yes.
And that's what financial professionals should be doing. They should be looking at your situation, what you're wanting to achieve, and then tailoring a solution around that.
And would that go in the realms of refinancing as well? Connect with your professional?
Oh, absolutely. Yeah, so there's a lot of banks now offering rebates. So if you are to move from one bank to another, they'll offer a rebate. Obviously, you won't move unless you're going to be saving money as well. So there's really no negatives to refinancing if there's a better deal for you.
Great.
So Matt, with the borrowing potential that the banks are looking at the moment is the interest rate might be 4%. They want you to be able to afford 8% just in case there are further interest rate rises over the next few years. You've got to remember it is a 30-year home loan. It's not, there may not have been interest rate changes in the last 2 years, but probably over the next 30 years there will be interest rate changes. So you need to be able to afford a lot more than what the current interest rate is. They also look at what type of income you've got to make sure it is stable. So any kind of overtime or bonuses, commissions, anything at all like that, they don't use the full amount. Any form of rental income, they also don't use the full amount. So it's a really good idea to have a chat with a financial professional to actually find out what your borrowing potential is.
Great.
Which is then going to open your eyes as to what you may be able to purchase.
So we've seen a few situations recently where we've had downsizers deciding that they want to buy, they're going to sell their home, but they want to find the right property first. We're then going into the realm of bridging finance. Any advice on that?
So bridging finance, the main important thing with that is to make sure that you do choose the right bank with it. A lot of banks, when it comes to bridging finance, they'll want an unconditional contract on the property you're selling prior to them actually doing bridging finance on the property you're buying. A lot of banks will want you to be able to afford both home loans at the same time.
Yes.
Whereas there are some banks out there that will, whatever your debt's going to be at the end, you only need to be able to afford that. As long as your property's on the market before you purchase a new property, that's fine with those banks. And then you've then got 6 months to sell your existing property.
Thank you so much for your time and advice today, Damien.
My pleasure.
And if you've got any further questions, feel free to give me a call. We'll talk soon.